And welcome, it's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. It was another volatile week. We will get into price action in the broader markets, where we closed for the week, and some rotation that is continuing to shape up. Lots of news that got attention last week, most definitely on Wednesday, the Federal Reserve's decision to cut rates by 0.5 percentage point had the most impact. Now, today on Friday, we did have triple witching, so we saw a little bit of negative price action, not entirely unexpected, but let's go ahead and take a look at some of the other attributes in that drove price action last week. We did see retail sales rise slightly in August. Homebuilder confidence index rose, and new home construction post their largest increase in 6 months. So we did see price action in those two areas. We will get into that. Next week, we do have core PCE data. This is a key Federal Reserve data point. And then also we have PMI, another revision for Q2 GDP due next week, and earnings from Costco. So just a few things to keep in mind as we head toward the end of September. So from here, let's go ahead and take a look at those broader markets and see where did we close for the week. And here we are with the daily price chart of the S&P 500, and we did close the week very close, but at a new high in price. We have an RSI that is in positive territory and trending upward. Likewise, with that MACD, we had that nice crossover that took place earlier this month, and it is continuing to trend upward. We're going to see a lot of high volume price action today, again, due to that triple witching, but net, we are in a very constructive period and area for the markets. Not all areas are participating, however, and we'll get into that as we move through today's show. Let's take a look at that Nasdaq Composite. It too had a gap up on Wednesday on the news, but it still remains about 3% below this prior high in price. And I did mention that not all stocks are going on all cylinders. Technology in particular continues to remain weak. We'll take a look at that, as well as underlying industry groups within that sector. But net, we are in a constructive position here. We have that RSI trending upward above that net neutral 50. And then likewise with that MACD in positive territory. So from here, let's go ahead and dive in with the S&P 500 in particular. We're going to take a look at those 11 sectors. This is a 2-month daily price chart view. We have that RSI sort so that we are seeing the relatively stronger areas up here at the forefront and your weaker areas down in this lower portion. Now, this view is not whippy. It will move fairly slowly, but very orderly, and it is an ideal way to stay on top of potential rotation that is taking place. So first up, front and center, is utilities. You may think that is defensive, but there is a definite growth component. We are going to take a look at, let's go ahead and look at the utility chart overall, up 2.6%. What drove today's rally? I'll share with you two names in particular that were very bullish price action today. And then also, as we move through, you will see REIT stocks up here at the forefront, normally defensive, but there are some areas here that are moving certainly in line with today's move in some utility stocks. Also, consumer discretionary up here at the forefront. Certainly heavyweight Tesla's gain this week certainly had an impact on that move. We did see a late day move back into Amazon. And then we're also going to take a look at that housing group, which is a component of the discretionary sector. Moving through, taking a look at some of these other areas. Industrials, another economically sensitive area similar to home builders, had a nice week. Here's that big gap up on Wednesday, a little bit of a pullback, but we did end in positive territory today in that industrial. This is an area where I've been expanding exposure to in my MEM Edge report, and we're looking certainly constructive this week there. Communication services, XLC, another area that gapped up certainly on Wednesday. The group was the second best performer for the week, up 2.3%. And a lot of that having to do with a very big move into Meta platforms. We're going to take a look at that stock. Alphabet also outperformed the markets this week. Those are two heavyweights, but there is a third stock exhibiting high momentum in this area that we are also going to look at as we move through here today. Let's take a look at some of these weaker sectors. I mentioned technology, and overall, the sector was up less than 1%. That's versus the S&P, which was up 1.4%. We did see a gap up on Wednesday, but overall, we are seeing continued relative underperformance. We'll take a look at one of the key areas that is causing that as we move forward. And also, we are still seeing vibrancy in gold stocks. This is XLB, the basic materials sector. A lot of that having to do with that rate cut and the continued consensus that we will see additional rate cuts into year end. Also of note here, we want to take a look at energy, and energy was the top performer this week. But of note is the fact that it is still in a confirmed downtrend. We did see the price of oil rise this week. Geopolitical concerns certainly among the reasons, but net, the group remains in a confirmed downtrend. From here, we are going to take a look beneath those sectors, and I use ETFs that are very relevant as far as keeping you on top of where these broader markets are seeing that outperformance and that strength, because you want to be aware of that, ideally to participate. Here we are with XHB. This is the S&P 500. Homebuilders ETF, and you can see that it had an advance going into Wednesday's price move with interest rates going down and a nice uptrend here, base breakout. We also had a double bottom formation going into this week, so the group still looks quite healthy. I talked about those numbers that came out last week relating to home builders that are generally bullish. Also up here at the forefront, small caps inching forward to that stronger part of that grid that we're looking at. And this is the Russell 2000 index, and another setup where we see this nice double bottom formation, and this 8-day advance in small cap stocks is the longest that we've seen in quite some time. So we are sitting up here quite nicely with that positive RSI and MACD. Also nice high volume characteristics on last week's rally. This is another area that does fare well in a declining interest rate environment. A lot of these smaller companies have debt that is going to be certainly larger than bigger companies, and the ability to restructure that debt at a lower interest rate is going to benefit them, also funding new projects. So let's go ahead and take a look at other areas that are moving back into a nice uptrend. Here we are with XRT, the retail ETF, back above that 50-day simple moving average, another industry that had a double bottom formation setting up. It is still very volatile. However, I do want to point out software stocks up here at the forefront. They are continuing to outperform, and we did have a base breakout to a new high. Now, it is of note with IGV, this ETF, but the overall software sector has over 330 stocks, and there is a definite have and have not within this industry group. Last week's gain was pushed by Oracle's strong earnings and moves into other AI-related software stocks. Moving through and taking a look at other cyclical areas that fare well in a declining rate environment. And here we are with KRE, the regional banking ETF, very close to posting a new high. So this is another area that you can examine. You can see that the RSI, MACD, both in positive territory and generally heading higher. Steer clear of some of those bigger banks such as JPM, however, because they did pre-announce a potential slowdown due to possible credit card defaults. And regional banks, the area I just showed you, is going to be a more vibrant area. Also, I did talk about technology being weak, and here's one of the key reasons. This is SOXX. This is the Semiconductor ETF, and you can see that we have a declining 50-day simple moving average. And this is not what you want to see, whether it is for an individual stock, for an industry group, because you will note that rally attempts above are going to be a bit more difficult in this declining 50-day. It's just really indicative of a longer term downtrend, and it will take a lot of power, similar to this May period, to get this overall semiconductor group back into an uptrend. As long as we are here, let's take a look at Nvidia. It was the weakest among those Magnificent Seven stocks, and you can see that this too has a generally downward trending 50-day simple moving average, generally flat momentum with that sideways RSI, likewise sideways MACD. So we are not in a bullish uptrend with Nvidia. That's certainly one of the key components, but there are other semiconductor stocks that are still trading below this key moving averages. It is something to be aware of as far as how you overweight or underweight your particular holdings. You will want to be aware of that. Volatility is continuing to decline. We're back down here in this 16 range. That's good news. Higher volatility, of course, points to higher fear and a generally negative backdrop for the broader markets. And taking a look, I want to make sure I'm not missing any of these sub-industry groups. And it does appear that we are well served with what we've looked at. But from here, let's go ahead and take a look. Now, I did not talk about the Dow Jones Industrial, but it was the first index to hit a new high in price, and it outperformed not so much this week, but in prior weeks. The Dow has been generally outperforming. So what I have here is a view of the 30 components within the Dow. We've sorted it by this RSI in descending order, more to give you a sense of where that outperformance is emanating from within the Dow. And the good news is, if we take a look at these stocks up here at the forefront, it is a generally diverse group. And from here, I will share with you the equal weighted view of the S&P 500, as it did perform in line with the S&P. So in essence, we are seeing a nice broadening out. We are seeing breadth, and that is what you want to see to entertain the possibility of a nice continuation rally into year end. So up here at the forefront, IBM is continuing to trend higher after coming out with good numbers earlier. And we can see that it's finding support above this 10-day simple moving average, bit of a consolidation after its big move. So we do have representation in the tech area. And from here, we cycle right into some of these bigger retailers. And here we are with Home Depot. And for those of you not familiar, Home Depot did make a purchase earlier this year of a large firm that caters to home construction building. And it is a move into Home Depot, looking at that purchase because we are seeing vibrancy in that new home building space. Also up here at the forefront, Nike, for those of you not familiar, they did have a new CEO come into play today. NKE is the ticker symbol. Market likes that, up 6.8%. We do have that nice black line up through the red, MACD crossover, which precedes a new uptrend, a bullish MACD and RSI up here. Now, of note, we may see resistance here at that downward trending 200-day simple moving average. There was news last week from another retailer that they are anticipating sales to China to decline, and Nike's growth before this deterioration that we've seen here has been China focused. So it is bullish, super near term, nice high volume today, but we will want to keep an eye on that at that 200-day potential upside resistance. So moving through, I talked about diversification. Cisco, this is another tech name. It's all about networking, and that is one area of the markets in technology that is working. So from here with Cisco, I'll just go ahead and pull up a weekly chart to share with you the concept that yes, we did have a 4.3% move this week, but take a look. That MACD just entering into positive territory with a bullish RSI. So it looks very constructive on that longer term chart, while a bit extended near term. Moving through, also heavy construction stocks have been on the move higher with Caterpillar. Now this is going to warrant a weekly view as well, quite simply because we are very close to about an 8-month possible base breakout with this MACD. So if we can get that black line up through the red on the weekly and couple that with a long-term base breakout, it would be very bullish for Caterpillar. And also, I talked about retailers. I did want to highlight Walmart. It did pull back this week a bit, but we are generally finding support above this 10-day simple moving average. This is part of my MEM Edge report. We did get into the stock after this gap up on earnings. And I did cite last Sunday that in my report, the stock was overbought, but it can be held, was on the lookout for a pullback. We've seen that, and it's looking constructive again. And one other name that you may not, it may have fallen off your radar, is McDonald's, MCD, and another example of a stock on that weekly chart that is just now breaking out of a 10-month base RSI MACD in positive territory. So there's some examples of what is working in the Dow. We then go into American Express, which would be, of course, a financial. And we also have Verizon, Telecom up here, Disney, and Travelers, which is, of course, an insurance. So most notable here is, again, that fact that we are seeing a nice diversification in those relative outperformers in the Dow Jones. So let's go ahead and take a look. I talked about Meta Platforms experiencing a nice move this week. We'll go ahead and begin with that daily chart. The stock was up over 7%. And here we are with that lengthy base breakout on Wednesday, which pushed the stock into a nice buy zone. You can see that MACD crossover. I talked about that indicating a new uptrend. And in fact, we are very much in that. And then also nice high volume on that breakout on certainly Thursday is when we saw that into a near-term high here today. So what I did want to point out, and we'll take a look at a couple of examples here, but how you can, when stocks such as Meta or any number of names that we've been reviewing today, you can go ahead and pivot, take a look at that intraday chart as your guide. Now, this is a 15-minute. I don't do this very frequently, but when stocks really begin to pick up their momentum, this shorter term view can be quite helpful as far as signaling potential buy points. So here we are with Meta. This is yesterday's gap up on the open. And from here, what that did is push the stock out of a base. Yes, you can use those base formations in intraday charts and into a nice uptrend. From here, you will want to make sure that the RSI remains above this 50. And if I didn't mention it, we are looking at a 30-minute chart. And also that we want this MACD to remain up here in positive territory. Sloping downward quite simply can indicate a period of consolidation, natural given the stock's advance. From here, let's take a look at some other high momentum stocks from this week that have experienced nice moves into base breakouts. This is another stock from my MEM Edge report that this week we did see actually the stock broke out here last week into a nice uptrend. Take a look at this black line up through the red, signaling this new uptrend. So from here, you will want to go ahead and put a 5-day simple moving average in, and also you will want to take a look at how the stock finds support at that new 5-day simple moving average into an uptrend. So from here, we'll go ahead and drill down into an intraday chart. Again, here is initially the 15-minute. From here, we can go ahead and take a look at a 30-minute or even a 1-hour chart, but we will get those same signals. Here we are with last Friday's downtrend reversal into this uptrend. So again, you're going to use those same signals that you would use on a daily chart. When you see a stock beginning to pick up momentum, you're on the lookout for a signal of a new buy point. Here we are on the 11th, where the stock moves back above the 5 and 13 simple moving average. Nice high volume. We get that MACD into positive territory, likewise with that RSI, and it signals the beginning of this nice uptrend. Now, on the negative side, you will want to use similar signals where we see that RSI trending into negative territory. Now, of course, this chart view is going to be for super near-term investors, but also if you were looking for a longer-term play into a name such as GE, you could use this to signal not a good time to buy. We're back below those moving averages, RSI, MACD, trending downward and in negative territory. So that was certainly one area that I did want to share with you. Also, I talked earlier about that move into utilities, XLU. So from here, I will share with you one of the primary reasons for today's bullish price action in select areas among utilities. We're looking here at Constellation Energy Group. The stock was up 22%. Let's take a look at that super high volume. And of note is the fact that the company did ink a deal with Microsoft today. The news came out, and it's all about providing and helping Microsoft achieve their net zero carbon emissions. And you can see also that we have a positive RSI and MACD. And also of note is the fact that CEG owns 25% of nuclear power reactors. So in essence, this move is confirming thoughts that came out in, I would say, June, late June. Morgan Stanley was putting out a lot of research talking about a nuclear renaissance and the fact that we will see an increase in the number of nuclear reactors, all about the increased need for energy. And certainly data centers are a big reason for that. So we did see this big advance in CEG. In fact, they are bringing 3 Mile Island, or trying to bring 2 more of their 3 reactors back in. And I'm only mentioning that because I remember it quite well years ago when they had that horrible accident, but they could be coming back into play. Here we are with VST. This is another energy related nuclear power name, and take a look. We are now experiencing a very lengthy base breakout, and I will go ahead again and add that 5-day, and then when you get time, I would suggest that you take a look at that intraday, and you'll see that again ability. This is a stock that I did get into back here. So I'm enjoying this nice rally, but more importantly is that we are now seeing a very long-term 4+ month base breakout on heavy volume. So that intraday, in fact, we can certainly take a moment here and take a look as far as possible buy opportunities in the stock. We did experience a big move today, 16%. So we are still sitting up here above these key moving averages, and you can go ahead and use prior periods as your guide, in the sense that on this 30-minute chart, that RSI can be in an overbought position for a length of time. So for my work, I will use periodically, again, these intradays, but I will always need to see bullish price action on that daily. And then, of course, too, we can take a quick look for longer term investors on that weekly, and you'll see for the week we had a very significant move, but we are poised to have that black line up through the red. I'm on the lookout for certainly a little bit of consolidation, but net, a great looking area. So when we talk about this nuclear potential renaissance that is due to take place, there are other areas that supply to these nuclear plants, and uranium is one of them. So today we did see a gap up of 4% URA. This is the global X uranium ETF. We're just now getting into positive territory. So good news. I talked about that downward trending 50-day just generally being a very heavy look. So at this point in time, we will need to see more by way of upside price action to go ahead and bring that 50-day into an uptrend, which is ideally what you want for a longer term potential play. But we do still have bullish, certainly price action in the momentum near term as well. And that's it for this week's show. Any questions you might have, please leave them down below. I'll be happy to answer them. And as well, you will want to be aware that the S&P 500 closed last week at a new high. This is bullish. We've also seen considerable broadening out by way of participation of various areas, and that is good news, but you will want to be aware of those weaker areas. Make sure you're not overweighted. And again, using intraday as well as daily charts to guide your buying and selling activity. That's it for this week. I'm going to look for you again here next Friday. That's all I got.